Hey folks, Jed Bratt here with the Real Estate Jedi of Big Block Realty. And in this video, you're gonna find the latest stats and information on the San Diego County real estate market, including graphs, key indicators, and where this market is heading and the trends that we're seeing. Let's get right into it. All right, folks, we are looking at the San Diego County graph for active listings. This is our inventory, buyers' pick of homes for sale. Currently, we are up in the month of September, 27.2% year over year. This is for detached homes and all attached townhomes, twin homes, row homes, condos, etc. So 27.2% increase. Seasonal average is normally that we're going to top out around July, August, and then start going down in September. We saw a very slight decreasing here in September, but what we're really looking at is year over year increase because this is some of the highest levels we've seen since 2016 for sure. And that's certainly contributing to a little bit of a slowing down in the pace at which sales are happening. So, I should say this is a byproduct of that, but part of that, what's contributing to active listings, of course, is the amount of new listings coming in the market. So new listings that have not been listed before, we are at an increase from this time last year of 12.1%. Pending sales are down 9% year over year, so less properties going under contract, more new listings coming in the market. Sold listings are down 20.7% year over year, and this is actually pretty interesting because this is about the lowest sales volume we've had in many years for this early in the season. Normally September is still much higher before we start bottoming out in the end of the year around December and January. For the most part, yeah, we're at some of the lowest levels we've seen in many years for this time of year. But I think what's directly contributing to this is, of course, the interest rate increase, which we've had one more of since the last market update. And right now we're sitting at around a 4.71 average 30-year fixed rate across the nation. This is all loan products, but it's a general metric that we can kind of look at for a big picture of things. If we look back around the same time last year, we were almost an entire point less, at least 3/4 of a point less than we are right now. So that's this is certainly kicking into buyers' wallets right now because you can see that if we have a home loan amount of $500,000, and let's say we have a 4% interest rate on that, your monthly payment's $23.87, right? And if we only increase that to 5%, your payment goes up to $26.84. That is around a $300 increase for every 1% increase in the rate on a $500,000 loan for a 30-year fixed rate. And now this is just principal and interest, of course, so this doesn't include tax and insurance, but nonetheless, we can go ahead and figure out that around for every 1% increase between rates of 4 to 7% at least, you have an increase from anywhere from 12% to 10% in your actual monthly principal and interest payment. So if rates just go up 1% and you're actually spending 12% more out of your pocket towards your principal and interest, that of course inversely affects how much you can actually afford to buy. And that's part of the reason why we're having less properties go under contract and less properties actually getting sold, because whether or not buyers want to, the progression of interest rates is really hindering them from moving forward at the same rate that we would normally soak up this inventory. So that said, the trend is likely to continue. This is nothing crazily absurd. The typical inventory levels, as we can see, we got down just about record lows in December of 2017. That we've seen in many years, but overall, actually ever, that we have in this graph. But overall, the more normalized amount of properties on the market is going to be somewhere around here, and we're sort of reaching up and towards that area. So nothing to be alarmed about for certain, but definitely something to keep your eye on. The good thing about this for buyers is that at least is giving buyers an opportunity to get in areas where there's going to be a bit more motivated sellers and that might not be seeing the offer activity or buyer activity that they were really hoping for, which gives, of course, buyers a little bit more leverage than they had in the past, in the last 6 to 12 months at least for certain, and possibly the opportunity to negotiate a slightly better price or at least more concessions or more desirable terms for them. And of course, if interest rates were to go down, the benefit of that to the buyers is going to be that they got into a market at a time when it was more pro buyers than it has been in the last few years. And if interest rates go down, they would have at least been having the opportunity to lock in their price and terms they wanted, and then hopefully negotiate or refinance into a lower interest rate down the road. I'm not saying rates are going to go down. I'm just saying hypothetically that's one of the boons to buyers in today's market. As far as sellers go, we can see that the sales prices have still continued to go up. If I click over here, 6.4% year over year in the median price across San Diego County. So prices are not hurting at all quite yet. But of course, in certain areas, we are starting to see a bit of a downward pressure on some prices, just because there's going to be some sellers that are going to want to unload things a little bit quicker than, and they need to unload it quicker than they anticipated it would actually take in time to sell. So they're willing to take a little bit of a downside in their price to make that happen. So we're seeing a lot of price reductions still. Part of that is definitely due to them asking too much from the get-go, especially in this sort of environment when we have drastically increasing inventory amounts. So anyway, I hope that was helpful. Everything else in the economy seems to be still chugging along pretty smoothly, both locally and nationally. So we're going to keep our eye on this, and we'll keep you posted in the coming months and updates. And as always, if you have any questions, feel free to reach out to us, and make sure you check out our YouTube site as well, where you're going to get the most recent up-to-date videos on everything. Just search for The Real Estate Jedi on YouTube, and be sure to subscribe. As always, thanks for watching, and I will see you in the next video.